Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Monday, the 24th of April, 2017. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Lots of news, of course, to digest overnight. I will cover the highlights in case you're not up to date with what's going on in France. They had their first round of their first elimination round for their presidential election yesterday. The results came out at about 1:30 Central, 2:30 Eastern. That would be 8 p.m. 8 p.m. or 8:30 p.m. European Central European time. The results show that Macron, who is a doesn't run under a party, um, along with Le Pen, which is who is a nationalist populist, took the lead. The purpose of this first round is to eliminate all candidates except two. Macron got the majority of the vote, or the higher amount of the vote. 77.3% of voter turnout in France, lower than the traditional 80% or so. Uh, just so you know what about these candidates and why it's resulted in a gap up both in our equities as well as in the euro. The euro's up pretty big. It got up to $1.09, or approximately 200 pips last night. Macron's running on the platform for cutting public spending by about 60 billion euros and spending 50 billion to modernize the French economy. He's also pushing for change to labor laws and deregulation, very business friendly. And then Le Pen is basically your alt-right, the equivalent to the U.S. alt-right. Her platform is populism. It's about raising tariffs on imports to protect French industry, closing borders, going back to the French franc, and a referendum on Europe, the EU membership. Following the defeat of the other two main candidates, who are Fillon Hamon and Mélenchon, Fillon Hamon pushed their voters to vote for Macron. So it looks like it's a relief for the market. There's some risk off, right? The risk coming off the future in Europe, and so the market's response is to respond to lower risk by putting risk on in the markets, and that's what we're seeing, and it's been steady. The expectation was a slight retracement. I expected it to retrace to about 58 overnight. It has not done so. The low in the ES has been 65. The CAC 40 is up 4.3%. 4.3%. It's quite a pop. And again, the euro's trading around right now is trading around a dollar uh, 0.0891, close to $1.09. The DAX is up 3%, about 3%, and the Euro Stoxx is up about 3.8%. That's where we stand, and that's really what we're seeing here. Um, Again, the markets see lower risk of France leaving the eurozone, and a lower risk of an economic shake up. So that's where we are. Essentially, the bottom line is, folks are just tired of the old politics. We saw the same thing here in the United States. We saw it in the UK in the Brexit vote. Folks are just not interested in the same old, same old. They want a candidate who would shake things up, and it doesn't matter to a lot of folks. It doesn't matter what shape that candidate comes in, even if it's in a populist, protectionist flavor. So that's where we are. Other than that, it is Monday morning, so we want to talk about the week. This morning, we'll start out by today's calendar. This morning, we got the IFO, the German IFO Business Climate Index. It came in at 112.9, which is higher than the 112.4. While the economy is growing strongly, companies are somewhat less optimistic about their 6-month business outlooks. That's the result of that. In addition to that, this morning at 11:30 Eastern, we get Fed Speaker Kashkari, and then we get the same Fed Speaker at 3:15 p.m. Eastern Time. Looking down the line at the week, tomorrow we get U.S. new home sales, FHFA house prices, S&P Schiller, and consumer confidence. Wednesday is fairly squeaky clean. Not much to report for Wednesday. Thursday's heavy. ECB's announcement comes out with the refi rate and lending facility, deposit refi rate and lending facility. ECB's Draghi's speech. We also get the German GfK consumer number, and in the U.S. we get advanced goods, wholesale inventories, durable goods, pending home sales. That's all on Thursday, and then we also get a heavy day on Friday. UK GfK consumer, GDP index of services in the UK. The Eurozone gets M3 money supply and CPI. The US gets core PCE, GDP annualized, PMI, University of Michigan, and Fed's Harker. So Thursday, Friday are the heavy hitters this week. Tomorrow we just have a few light numbers, second tier numbers, second and third tier numbers to go with. Other than that, there's not much to talk about. Let's switch gears here and look at what we expected on Friday versus what we got. On Friday, I was looking for an open auction that drops. I was looking for it to drop towards the 23.44-45 area. It didn't draw up very well here. And then I was looking for it to gain back some of that on the close by rallying into the close. The theory behind the primary hypothesis is the trend day, but also the fact that we have to take, we're likely to see some risk coming off into the French election. That's what drove the selling premise on Hypo 1. Hypo 2, a continuation of the prior day's auction. We were opening right up against the point of control, expected an open auction that then pushes higher and was looking for 23.63 and then a return to the range. That would have actually broken us out of the weekly high and the fact that we had an inside week, but that didn't happen. Here's what actually happened. An open auction on the open, so there we have it. Open auction right there, opening swing highs up here, opening swing lows down there, and then we break to the downside and we seem to not be able to get above the mid. Multiple tests. It ends up pushing to 23.40.50, and for those of you who have been listening for at least the last couple of weeks, 23.40 has been key support resistance level. In this area, we seem to visit and revisit and visit and revisit. Once we got to the 23.40, we had a higher low on the retest, and then we pushed to the middle and we finished in the middle. Still, given that we didn't breach the high and the low, we had an inside day on Friday, and we had an inside week last week. We finished right on top of the point of control at 23.47.75 on Friday, and then of course we've gapped up this morning. We've gapped up and are moving and are holding higher prices. Here's what it looks like. So we closed at 23.47 and a quarter with a point of control at 23.47.50 actually, and then we have gapped up. We opened at 23.65.75, pushed higher immediately, and then basically skated around. This is by the time I finished looking at the market, it was around here last night, and it looked like it was likely to push lower the way this was forming. Essentially, we pushed on an impulse up. We had a small retest back, and then every attempt higher ended up going with a lower high, and then we just stabilized throughout the Asian session, and we opened strong once the European indices opened up. We had a retracement, and then we've pushed even higher since then, and then we have a lower high and are challenging the point of control in the mid this morning. The stance of the market, the way it is now, of course, risk is on with the European indices leading the pack. Again, as I said, the Euro stock's up 3.76%, and the CAC is about 4.2%. And gold taking a hit, gold down 1.3% right now, trading at $1,272, off $17.30 an ounce on the June contract. Crude oil basically flat, trading at 49.54. Crude had its big drop on Friday as anticipated. I talked about it a little bit on Friday morning that I'm expecting a continuation down. The big price in crude that was exceeded to the downside is 50 and a quarter, and I expect to bounce back up there uh, to about 50 and a quarter at some point this week. So this is the this is what's going on. Let's take a look at what we've done. Clearly, overnight inventory is long. Let's look at what we've done on a weekly basis. If we take the week that where the market jumped up, which was the week of February 13th, and we project forward, you'll see that the point of control is at 56 and a quarter. 56 and a quarter, and that's the key price in this area. We're well above it, and are challenging the next highest point of control at 77.50. But overall, we've been in complete balance here since the pop up in February. We've been quite sideways since then. Let me pull up my. Oh no, here we go. This is the market profile chart on a weekly basis. Just to zoom in, again, I talked about this before. We are in a somewhat of a bullish triangle here. The market has come up, tested down, up, and is consolidating. It's approaching an apex. The prior week was had a lower high, a higher high, and a lower low, and we traded inside of it. We closed inside of the prior week's point of control. We closed above. We closed above the prior week's point of control. We closed above this past week's point of control. Buyers are doing a good job holding prices up, and the expectation, which played out in the election here, the expectation was for a break higher, as mentioned last week. So that's where we are now. That's pretty much the summary of where we are. I know I've covered a lot. So let's look at what's going on up here. So above us, 2378 is key, right? Below us, 2360, 2353.50 are the key prices. We are trading right up against the naked point of control from way back, 2371.50. We're opening right on top of it. The expectation is for an open auction. I'm looking for the market to make an attempt lower early, and then look for continuation higher as the market opens. I'm not expecting too much of a range today. Again, it is Monday. We do have a gap up. We've had a tendency to leave gap zones behind on gaps up to the gaps on the bullish side. We've had a tendency to leave a gap zone open. I don't expect the market to drop very much. The low overnight 65 and a quarter. This is your primary hypothesis for today. I'm going to look for areas to triangle. I'm going to look for areas to lean against the bids on the pullback to go long. So I'm looking for any failure to the downside and persistence from the buy side. In other words, bids holding, icebergs kicking in, or sellers hitting the bid and unable to move the market. I'll look for areas to get long and look for a break of the opening swing high and the overnight high. That's the primary hypothesis. Now, if the market wants to rebalance, the expectation is for the market to push higher early on, take out the overnight high, and then start to move lower into the prior days towards the prior days range. Again, I'm expecting us to leave some sort of uh, gap zone beneath us. Wow, that's an awful rectangle there, but this is what I'm looking for. The extent to which we'll move lower is probably 2360, 2360, and that would be the first key support below. That's an MC point of control and a key level over the last couple of weeks. That would be hypo 2. So if I see movement to the upside early, man, what's up with these triangles? If I see the move up early on, then I need to gauge how aggressive the upside push is, and I'll be looking for areas to sell against it. I'm trading basically from the outside in today, looking for it to return to the open at some point, cross the open at some point. So that's what I'm looking for today. Now, we are in a gap zone up. We're in a gap zone up inside of a balance. There's a higher probability of higher time frame. In other words, the bigger players, OTF, what we call the OTF, the other time frame, participating to balance their books. So be careful today that there's also an opportunity, an elevated risk because of this, that we would get an open test drive or an open drive. In other words, we might see a higher time frame player or players come in and push the market directionally. So this is not the greatest day to sit there and take a strong bias on the open and just go right at it from the open. It's smarter to just sit out the first 15 minutes or so, find out which side exposes itself as the pusher, then look to trade from that side. This is what I do, and I advise you to look at the same thing. Again, the market's imbalanced right now because of this gap, and it could result in a quick push in one direction or another. We have option expiration behind us from Friday, so the market's free to make a move early on. Anyway, I'll leave you with those thoughts. Good luck today, and I'll talk to you tomorrow.